Good morning, Barbara. How are you today?
I'm great. How are you?
Wonderful. I thought about you actually. I thought about you this morning. How have you been?
I've been good.
Yeah. How was your New Year?
It was great. It was quiet, but it was good.
I thought about you actually. I thought about you this morning. Oh no, I gotta mute that. I can't be listening to my voice, guys, because then I can't talk anymore in public. How was your? There we go. Sorry, I had to mute that YouTube because it like kind of auto plays in the background. It's a little weird, but yeah. You say you stayed in?
Oh yeah, we stayed in.
Me and me too. My children and me. And yeah, that's it. I was on the phone with a girlfriend. All we did. No kissing strangers either. See?
So you don't you don't have to reach out to Aliqua for any remedy then, huh?
No, I didn't kiss a stranger. Although it does sound exciting. Okay, I'm getting ready to bring up my screen. So, anybody have any amazing, appropriate New Year's stories they want to share for those of us who stayed in all night long? I know there's a lot of people on this call. Somebody did something for New Year's.
Good morning, Jenny. How are you?
Good morning, Avery. What'd you do?
Worked.
That's not that exciting. Seriously.
For my job, the holiday season is always our busiest time of year, so I've been picking up as much overtime as I could and all that crazy stuff. So that's how I spent my holidays.
Well, at least you got some overtime. What do you do again?
So I work for a special department with Apple Care. So what we do is we do a lot of data analytics, but I often work the craziest hours possible. So yeah. So there's times where I could be on the call, but I'm actually on the phone with someone. I'm in a meeting. So I have my AirPod in one ear. I'm trying to listen to the meetings in one ear. So there's times where I'm on, but I'm actually quiet. And I'm actually getting ready to go to work right now, but that's how I spent my...
You're the guy we pay for when we pay for Apple Care, and you're listening to me talk.
Yeah.
Right.
So we're all on the same page, everybody. Okay.
But mind you, I don't answer Apple questions while I'm off the clock. So.
Well, now you're my guy.
I don't, unless you pay.
Well, happy New Year's. I hope you guys all had an amazing.
Thank you. I hope you had a good New Year too.
It was good. It was peaceful. I watched the Steve Harvey ball drop, which was nice. Like, cause I don't usually watch the ball drop, so it was fun for me. It was definitely exciting. So new. But okay, I'm gonna let Barbara lead us this morning. I had considered doing some other things this morning, but I want Barbara to lead us as this is our first call, and it was kind of be nonchalant because again, it's the first week of the year. We shouldn't be trading a lot of heavy volume, but either way, you know, let's lead this year off with something amazing. Let's let God guide us. Let's put us in the right direction for the first call of the year. So, Barbara, you can take over.
All right. Father, in the name of Jesus, Lord, we just come before you, Father, thanking you, first of all, for all that you're doing and continue to do, Lord. We thank you, Lord, because you are a God of new beginnings, Father. We thank you, Lord, because you are a God of prosperity, Father. We thank you, Father, for your guidance, for your wisdom. We thank you, Father, for just sending us in the right directions, Father, sending us for our purposes that you have for us, Lord. We just thank you, Lord, that as we do start this new year, Father, that you just continue to teach us and guide us and bring us together in unity, Lord. I just thank you for all that you do and continue to do. And I just pray a blessing for everyone, Lord, that's coming in to the membership. Father, I thank you for the leadership. And thank you, Lord, for ideas and concepts, Lord. And I thank you, Lord, that we will continue to just be steadfast, immovable, and always abounding, Lord. I thank you, Father, for your word. In Jesus' name, amen.
Amen. Amen. Absolutely. I love that. I do. Okay, so let's start off by first off saying, does anybody have any questions, comments, or things they don't quite understand still in terms of the strategy?
Yes, Jenny, this is Taraka.
Bless you.
Thank you. Dorako, come on out. How are you doing?
I'm doing great. How are you?
Wonderful. It's a new year. Can't complain, right?
Yeah. I have a quick question, and then I'm new to it, and I was still trying to set it up. I believe I have the new MACD installed, and I have the EMA and the SMA installed, but I don't have those arrows up and down. I think you call them fractals. Yeah, those.
You don't really need these. So
Okay,
fractals,
good, good.
um, let's see, fractals are a Bill Williams thing. They have a lot of uses, but there's a much better YouTube video that says it much more short-winded than I would do it. So it's like maybe 2 or 3 minutes long, and it basically tells you that this is not going to paint until the close of this candle.
Okay,
This is basically measured off 1, 2, so 2 candles before and 2 candles after, and that's how this paints. Now, if this candle doesn't close, okay, or let's say this shows up before this candle closes, this can still disappear, but once this candle closes, it's stable. So that fractal, I wouldn't really super recommend using it just yet. I use that more on swing trades. I use that, actually, I have a whole hour strategy based off of just the fractal break and some oscillators and silly indicators. So, um, like, it's really great, but honest to God, trying to use a fractal break on a 1 to 5 minute chart when the average trading range, let me sound like I know what I'm talking about for a half a minute here. Um, the average trading range isn't even a full pip sometimes. Sometimes it might be 2 or 3 pips. So using a fractal break or even the opposing direction on a 1 and 5 minute chart when the average trading movement, okay, to use that terminology, is potentially barely a handful of pips at most,
mhm.
you're asking for, high fees, high spread, and it's not worth it. So I think that they have a lot of value, but not necessarily at this point.
Okay. That's all I wanted to know. And also, um, about the recording. Is there past videos that I can watch? Because right now I have to leave. I can only be on for like 5 minutes and I have an appointment to go to. So I was wondering if I can rewatch the videos or the archives of the older videos. That way I can kind of get caught up a little bit of what's going on.
Yeah, well, you totally can. Let me bring this over here. So I'm gonna go to the Scalp group if it will let me. Of course, it's gonna malfunction because I'm live on a call. It's got to do that. Let's see. So if we pull up these dots, okay, and we go to, come on, I know this. There it is. Go to the videos, okay? These are the little ones that have been shared. Go back, not videos. Go to links shared. I'm pretty sure is what it is. You'll get a chance to see any of these right here that say YouTube. This is my YouTube channel.
Got you.
Um, so that's really what you're looking for. They're not all recorded, to be transparent, but there's enough of them there that you'll get the bigger picture. And I'm going to make a new video this week. I wanted to make sure I got all the questions down on a piece of paper, hoping to make something that's like 5 minutes, but probably closer to 10, that directly states, and again, in this right here, this pin post, it
Yeah.
will tell you exactly what we're doing. And it
Yep.
sounds silly, but please read it a few times. Like, this is it. And this has been able to make some people quite a bit of money. There's somebody that's got 83,000 right now as their account balance, and um, so we have quite a few people making big numbers. We have people who are getting it, and it's just a matter of being able to truly understand what you're doing. And I think one of the things that I left out, so I will take 100% ownership of that, is please keep in mind that the trade manager is your second manager. You are still your first manager, and because this is a scalping strategy, once you're in any profit, you need to be babysitting that. You need to be moving your stop up or protecting that, because the management is really what's going to offset that accuracy ratio. It's going to make you, it's the difference between 70 and 85%. And that 70 to 85% difference is the difference between you withdrew 10 grand in a few weeks and you loaded up 200 in a few weeks. It
Okay.
literally is that important. So
Like in the trade manager that you guys use, I tried to look that up and how to install it. I don't know how to do that. The trade manager part.
okay, again, that's pretty simple. I don't know why it's not on this chart. That's silly me. But all you're doing is, so the odds are you're loading it to the wrong spot. So if you've tried to do it, you have to load it to this expert advisor folder.
Got you. I didn't do that.
And then this has to be turned on. And then if other auto traders have different things and hoops you have to jump through, but this one's fairly simple. You put it in your expert advisor folder. You'll drag it on the chart. Once you drag it on the chart, let's pull it up real quick. Then you will have, make sure you click allow trading. Make sure these are clicked.
Okay.
And these are the settings we're using right now. I'm not going to fib and say I truly understand or understood the step method, I will just say that numbers don't lie. So a while ago, I was using step, keep the distance. Now I'm using classic trailing stop. So this is yielding me slightly more pips, nothing that's massively measurable, but
Mhm.
enough to make a difference essentially.
Okay.
So these are the settings. If you want to take a screenshot, you can save these settings. So you just have to pull them up every time you load this onto a chart. You can save this one as, for example, scalping settings for Ron's trader. And then you can even save one that says, swing settings for Ron's trader,
Okay. Let me see. I just screenshotted, so I'm good there.
All right, awesome.
Thank you so much.
You are welcome. And good morning and happy new year.
You too.
All right, guys, any other questions, comments in terms of this trading strategy? Anybody at all?
Morning, Jenny.
Good morning.
I hope you have a great year, and I hope your holidays were nice.
Yes, they were lovely. They were peaceful. How about you? Did you do anything amazing?
No, I was like, I don't remember what it was. I spent all day yesterday cutting grass, so
Do you have a
that's
lot of
another
land?
activity. Say again?
Do you have a lot of land?
Yeah, they have some property out in the bush, so it got away. I didn't cut it for a long time, so it was all overgrown. It was a hard day, but it was worth it. It looked good afterwards.
That's a lot of work. I used to live on 35 acres and it's different terrain and it's got ponds and trees. And once you let it get overgrown like that, it's a body jolting experience to finally get it all brushed down. So
Yeah, that biggest relative here. I mean, I live in Jamaica, so biggest. I mean, it's like about an acre and a half, but cutting it with a hand more is a lot of work, you know.
all right, yeah, I feel you. What's your question? How can I help you?
I mean, I'm kind of thinking that there was something I've been neglecting with this strategy. Like, I, I, uh, I'm thinking, should we look at should we start with a higher time frame, like maybe the 1 hour, and then afterwards start looking for trades in that direction? Because sometimes I noticed that I mean, it seemed like the trades always went against me, hit my stop loss, but then I started to think, all right, if you find the direction on a higher time frame and then you go in that direction, I think maybe some people have been doing that and it just didn't hit me. That maybe I should find the trend on a higher time frame and then scalp in that direction, and you have a far higher degree of success. So, am I correct in looking at it this way?
David, that's a really good question. So, and I am not, skilled in the short answers. So first off, you'll hear me on these calls say some, for example, on the last call we did, somebody said, hey, let's sell GU. But my understanding of structure is a little different. So I still take into account what the pair is doing overall because I mark up the charts naked every single weekend. So naked charting, well, actually, I keep my EMAs on there, but naked charting. So I have an idea of what the pair is doing. And not always will you be right. You're still going to be wrong. But for example, everybody wanted to sell that. And it did sell a few times and it did match the rules a few times. But me personally, I would be waiting for a buy on that one because of structure, because of the higher time frames. So there's your first option. And if I had to recommend one to anyone, it would be that one. If you mark up the charts naked, or if you mark up just basic structure, you can use regular candles or you can use the line chart. I super recommend those two above anything else. A lot of people are creating new ways, but personally, I feel like those are the most accurate ways and the most consistent ways. So my first answer would be please mark up the charts every weekend. Once you do that, I mean, that's a 1 hour thing. So time yourself. Guys, it's a new year. Time management is everything. So
And
time,
Jenny, by that you mean put in support and resistance.
yes, get an idea of where your zones are at. And then my second answer is this, without going into too much proprietary information, because everybody likes to claim basic knowledge as their own to the point where they make you sign an NDA agreement. There are many, many companies who use, I'm going to use the term reversal strategies, and they use it in conjunction with an oscillator such as our MACD, such as ADX or TDI. There are many companies who have entire bots and systems set up based off of doing what you're saying to do. So I'm hoping you're catching what I'm throwing down here. But for example, one of the companies that I'm fond of, there's only a handful that I'm truly fond of, but does something comparable where they go off of the 4 hour and then they only take scalps in the same direction as the 4 hour, right? So any setup, if this is above the 50, for example, this is our 50 moving average, and let's say we're on the 4 hour chart, we're only going to be looking for buys, right? Now the 4 hour, especially in a slow moving market like it's been for the past 6 months or so, probably not the best. It's just a little bit slow. I would maybe go to the 1 hour and say, okay, if the market is going up, I'm going to keep looking for buys because we're above. That is definitely one of the safest and best things you can do. Now, no, you don't have to do that, but if you were willing to, uh, and that's something I wanted to show you guys, was you can actually, the way that Scott built this, okay, is pretty awesome. Now, mind you, you have to remember, you have to have the ownership to remember, but this right here where it says manual bias time frame, 5 minutes, right? So please pay attention to this. You can change this. So I can put this to where my manual bias time frame is on the 1 hour or on the 4 hour and only take trades that way. We also, there's a multitude of other tools that and systems and strategies. One of the next strategy I want to teach is something kind of comparable where you're only taking entries based off of the 4 hour trade and the 4 hour time frame, and it works very, very well. But remember that if you change this, you need to change this also. So I currently have this set at true. So basically what that means is if I'm on the 5 minute, I'll show you. If I'm on the 4 hour chart, my MACD bias is pulling from the daily, right? If I'm on the 5 minute chart, my MACD bias is pulling from the 15. That's how this works. So you can change that bias to do it as you choose, totally up to you. But essentially all you're trying to do is catch a sum of the pips. So we can simplify it or complicate it as much as we see fit. But at the end of the day, it's super, super simple. This alone is an impeccable tool. It's amazing. It definitely has some fake outs, but when you combine it with that, that's why I like the ADX. I don't need the ADX, but man, that momentum really keeps me out of trouble, right? So take this for example, this ADX, and I know this is a 5 minute time frame. We have a crossover, but we would see kind of that, and the ADX isn't playing nice. It's neutral. Hold on, I think I'm allergic to something. Sorry, I couldn't mute again. Thank you, baby.
Bless you.
Thank you. My son's outside my office door. He's like, bless you. I didn't have time to mute it because I was like, nope, it's coming. So just take a look. When we use something like combining with this, if I had to pick any one thing to add or to tell you guys, it would be the momentum line on the ADX because it's going to keep you out of the stuff that you shouldn't be in. It's also that keeping you out of bad trades is also why I still have fractals on here. Because something like this, it's really tempting to want to buy it. But we're not technically making new highs. We're not breaking fractal levels. So of course we have the opposing one appearing, but momentum is down. We're saying neutral. I know we're saying neutral, but this is going off of the 15-minute time frame. So just to give you an idea of how I see it, the momentum line I currently have is 25. That's correct. I really need momentum to be above 25. Again, it's still not foolproof. I still take losses, but it just helps me. I mean, some people may not see it, and that's okay. But for me, this right here is gold. So if you're willing, long story short, yes, it's a very good idea. Very, very good idea to learn to see the market bigger than just any one strategy. Now you have to control yourself, and that's the hard part, to not overcomplicate what you're doing and learn to stick with one strategy. Obviously, that's still the key. But that accumulative knowledge in terms of what the 4 hour is doing, if it's hitting an area of support, if it's hitting the average daily high, if it's made its average, trading range. I'm not as comfortable with that term, but to long story short, answer your question, that is an amazing, great, perfect idea. However you go about it, it's great.
Okay, thank you, Jenny. I appreciate it. Yeah, I think that will help me. So, thank you.
You are welcome. All right, guys, any other questions, comments, things about the strategy? I don't know how to pronounce your name, but I don't want to mess it up too bad. Yes, this is the 25 line. And I have the current setting set at 10, and I can show you kind of how that's set up. I like it. It really, really keeps me on a treble quite a bit. Again, nothing's perfect. I'm still not perfect. Not even satisfied. I have it set at 10, set to close, white. These are my settings. You can take a picture. Okay, colors. Green and purple. Well, because those are biblical and I kind of like them. Levels are 25 and 40. Most of my charts only have 25, but I have 40 on this broker still programmed in. 40 is good too because it shows you when the really big momentum is coming. And that's how I have it set up all the way across the board. Gotcha.
Gold is finally breaking range.
I know everyone's expecting it to sell. I'm guessing we're popping up for a while. Does anybody have a markup on gold in terms of charting?
Well, we're interfacing with the ADR right now.
The ATR?
ADR.
ADR, okay. Oh, this one then. This one. Oh, so somebody had in the group chat, Scott, I wasn't sure if that was yours, that it says right here on the side, it was like percentage of ATR reached. Is that yours?
No.
That looks pretty awesome. Pretty awesome. I think the ATR would be phenomenal in terms of trading with the day chart, which is what VP Morgan does. So like, if you honestly got only checked your charts once a day, and that's 5 p.m. my time, you'd have to check it at, well, we have to be mindful of those spreads that open up, and probably wouldn't enter until 5:30 or something, because 5:30 Eastern time, because you'd want to wait for that to calm down. But you'd essentially just be looking at what that candle did, how it did it, if it matches the rules, and then go for half of the ATR. I mean, hopefully the whole ATR, but it would work phenomenally well. And that potentially you could do the same thing with smaller time frames, but I think it would be most effective on the daily. By far. By far, by far.
Hey, Jenny.
Hey, Weddy.
Hey, what is the difference between ADR and ATR? I just hear you throwing around these terms. I'm trying to figure it out.
Okay, so I'm going to give you my answer, and I think that somebody's probably going to correct me. So, and that's okay. So ATR is the average true range, if I'm saying that correctly. So, okay. For example, the average true range or trading range, depending on who you're talking to, of this candle, let's say it's 50 pips, and I'll pull up the actual indicator. This right here is the ATR indicator. So the average trading range, average true range of the last 14 candles, see how that's set? Mm-hmm. Is currently, let's pull it up and see. Right now it's 0.008. We got to go to something bigger so we have actual pips to count. So right here would be, what is that, 1 pip? Average?
No, it's 12 pips.
So 12 pips. 12. Right? So that's how many on average each candle was worth. Now,
okay.
Well, that's each candle from high to low.
From high to low, okay.
So okay. The entire range of that candle on average for the last 14 candles.
Gotcha.
And so the ATR is for whatever time frame you're on. Mm-hmm. ADR is just the ATR for the daily.
Okay.
Unless you're using this right here. So the average daily range, okay, of the last week, so it's 5 trading days, is 107 pips per day. That's 1 trading day. That's a 24-hour period. Is from my understanding of how it's calculated. For the last 4 weeks, it's 101. The last 12 weeks, it's also 101. So that's how you can really, like, I like this information. Oh, and that's ADR, and this is also ADR. This is ADR high, ADR low. So this is just also an indicator that shows you what the average daily range was. This is also based off of the last 14 candles.
Okay.
And to explain how that ADR range works, is the ADR number then is applied from whatever the current high of the day is to give you the ADR low from that high. And then the ADR high line is set from whatever the daily low is plus the ADR. Hmm. And those lines will collapse in toward the middle as the day's trades.
Yeah.
Gotcha.
And gold is breaking out to new highs.
Let's see. We'll just miss it. I don't, we could probably take a few scalps up, but we'd have to be super careful. That's 15-minute chart. Cause it's gonna, I think it's, right now it's pushing up. It's pushing past all those stops. It's gonna push up hard. Does anybody know where the next support and resistance is? I have not marked up gold. I do not. Well, actually, I think I did. If you guys want to take a scalp on gold, you guys can, but just baby it. It's moving up. You probably get a few pips out of it. Probably definitely your 10, but just be careful.
Yeah, we have to go out to the 4-hour chart to start to see enough history to mark it up.
That's what I'm going to my trading view. I can't mark on MT4. I'm not that cool. Just not that cool. But so to answer that question, yeah, the ADR is just the average daily range. So the reason why it's important is that it will show you, it'll show you how many pips you can get in a day. And it'll also show you when the market is moving and stopping and stalling. So for example, we know that the average daily range should be much higher this time of year than it was in the summer. And as you can see, that's not the case.
Hey, Gina, last time I marked up gold, I just had a note here in my trading plan was 1540. So I'm actually have other shorts in some other accounts that I'm holding that to about 1540.
1535 is the next major. So we've
Yeah,
got
that's
one.
So I read it wrong.
So it's okay. I'm just, that was eyeballing it. That's not nothing fancy, I promise.
I'm
Well,
seeing
here.
a zone starting at about 1530 to 1535.
Let's pull it up. Let's do this together. So here, whoopsie. We broke out. I'm gonna go to super simple. Just I'm looking left. This is not fancy. This is not complicated. Eyeball it and kind of see where price is going. Wicks equal rejection. So does it mean it's going to stop here? No, it just means there's a probability of it stopping here. It also means price, there's a very high probability of it going to there. If you guys are following that. I'm going to go to the line chart to show you.
Yes, that's where I take it.
Here.
Yeah.
That's 1543, yeah. Anywhere in this zone, but that's a lot of pips. So is it worth your risk? So a long position from here. Now, mind you, we're still scalping, but we're trying to scalp in a way that says, okay, is this going where we think it's going to go? Are we going with the direction of the trend? That's 138 pips to go up. So yeah, you guys can buy it probably 5 or 6 times, or at least the most amount of buys I think that you could probably for sure get is closer to 3 to 4 buys equaling approximately 50 pips. 3 to 4 buys is what I would be looking for personally. Because if it decides to break, it's going to break here and then we'll go back down. If not here, and then our third level is here. But I think we'd have to have, well, guys, it's also a new year. A new year. Let's see. 2018, that's all 2019. See this area? Here, 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 here. That last one, that's 1560. And then we'll definitely see the fall.
Yeah, gold's rejecting hard right now.
That's how many pips down is it?
It came down about 20.
Quick, it came down 20 quick, huh?
Yep, now it's bouncing hard off of the ADR line. That's a big tail.
1560. I don't really, I mean, it could turn around here, but let's go to the 1 hour chart.
Actually, that's bouncing off of support formed from, back about a half an hour ago or an hour ago.
If it breaks this for the low, we'd be looking for it to come back down to retest here. If it breaks that low. Not to say that it would. A lot of people have this as a sell. A lot of people do. And they're people who know how to trade, in all fairness. They trade well. But currently it's going up. Let's go to 1 hour. Anybody else got an opinion on gold? Come and collaborate with us. No one, huh? Okay. Well,
Jenny. Hi, Jenny.
hi, Catherine. How are you?
Happy New Year. Long time no speak. How are
Happy New
you?
Year. Wonderful. I haven't heard from you in a little while. How have you been?
Yeah. I've just kind of stopped trading for a while, so I've been MIA.
Well, that's a good way to be. That's a great way to be.
No, I just joined this group yesterday, so I guess probably some of the things you guys are talking, I'm kind of like a bit lost for now.
Okay, so no, that's totally okay. This side little group, there's signals in the chat. Some of them are mine. Most of them I think are Elvis's. A few from me, a few from Pat, a lot from Elvis. In the signal group. Then there's the discussion group, okay? And other than that, there's this like whole scalping strategy. So this little group we were supposed to start for the idea of putting specific chart markups in that channel. That's why we started the channel. Hasn't necessarily turned out that way. But in that channel, which I will show you on the new share, bear with me. Oh, if you were on when I just showed the last gentleman, right? Were you on?
How do I get to this channel?
Miss Donna, she'll send you an invite or message her.
Okay, all right.
So this right here was meant originally so we could post markups, and I'm really hoping that this year we do that. So I didn't want another group to manage or to worry about, but the whole concept of this group is to post markups. The pinned post has a to-do video, you know, how to do it, what we're doing, the rules for how we're doing it, exactly what we're doing.
Yeah, I just don't want to take too much of your time, so you can carry on. I'll just I'll just
here.
Donna. Okay, all right.
Yes, ma'am. Well, thank you and Happy New Year.
Yeah, I'm glad to be in this group. Yeah.
Well, welcome. You'll love it over here. We kind of just hang out and talk and joke.
Okay. All right.
Yes, thank you. All right, EU is down. Okay, any other questions, comments of how to do the strategy, any pairs specifically? Because after this, we're starting that new challenge next week. I'm really hoping to see people have taken 50 to 100 trades, like a lot of volume with good accuracy. That is my genuine hope of what I'm looking to accomplish right here. What I'm hoping that we accomplish. We. This is your moment. So don't be shy.
Jenny, I've got a question for you.
Yes, sir.
This came up whenever our last meeting was that Thursday last week?
Stop loss, is that it?
Not regarding stop loss. We did talk about that, but this is, somebody had asked a question about why an arrow appeared. And the reason was it was switching from a neutral bias to a bullish bias, I believe, in his example.
Okay, that's you. What pair was it?
Hold on, I need to get to my Telegram, which is underneath this window. It was CAD something, and he was on 4 hour, I think. Wrong group. Scrolling. I don't know that it matters because the main gist of the question is that for the bias, I'm capturing the status of the next higher time frame at the lower time frame candle close. I'm not relying on the previously closed higher time frame.
And you don't remember who asked that question?
That was Anthony Ambush.
Okay. I don't know if he's on here. Let's see.
It was CAD yen.
Yeah, so I've got CAD yen up. I've got the 4 hour. Oh.
And the time, trying to see what the time was. I guess go by the post time. That was 9:19 my local time. Let's see here. CAD yen.
I guess they must have been talking about this one.
Yeah, I think it's the arrow that appeared. No, that's not the one. It would be back a ways. Let's see here. December 30th.
December 30th is. Are you sure it's the 4 hour, not the 1 hour?
He's showing. No, he's out on 1 hour. You're absolutely right.
I was okay. I'm like, there's not that many options on here.
Yeah, I know. So it's drawing from the 4 hour.
Okay, so we've got here. Oh,
Okay.
I think it was this one.
Yeah, it is there. Let me get this window back up where I expect it to be. Okay, so you notice how, let me get my markups here.
But
So when this happened right there,
mm-hmm.
we got this arrow. And that's because we went from a bias right here of neutral to a bias of bullish. Now, if I were dealing with closed candles, that would have stayed green all the way through until the next 4 hour candle closed.
Okay.
And right now I'm taking a live shot at the close of each 1 hour candle to pick up the bias from the 4 hour candle formation that's still a live candle. You following that?
I am. So because there's 4 1 hour candles in one 4 hour candle. So
right. So this method is a little faster, but maybe it's not as accurate.
I see what you're saying.
So
that's how we got this right here. But now granted, I've been, learning this and kind of seeing where your arrows come from, right? But at the same time, they're good. They're not meant to be taken as a signal. Yes, this one would have been a false signal, right?
Oh, that's something else. That's a 3-9 cross.
That's a 3-9 cross. This right here is the one.
Right. You'd have to see it as, this arrow right here was a shift from neutral bias to the bearish bias. And it came back to neutral, did another shift to bearish.
So your arrow is coming up to show when the bias changes too.
Right. But it's not a closed higher time frame candle.
I see what you're saying.
Not a closed higher time frame candle. It is a open higher time frame candle.
Correct.
Because it's still developing?
Yes.
Right, it's still developing.
Okay.
So I'm wondering whether to shift this to being a closed candle or whether I keep it the way it is because it's faster.
You can't, because it would be too slow, right? Because remember, I'm sure you have some algorithm, because you're the guy who thinks like this and is super smart, but like indicators lag already to an extent. So if you slow it down, yes, we're only going to get more accurate signals, but then bear in mind, we're still going to get this one, for example.
Right.
So we're still going to have false positives. But the thing is we're going to get a lot less accurate ones either. Well, maybe you could, because if you slow it down and we're still using our eyeball to catch this part, right? To say, hey, this is lining up. We're using our eyeball in this moment. And then you slow it down. That could just be our second or late entry. I don't know. You could ask, there's 45 people on this call. What is your guys' vote? Slightly better accuracy, but a lot slower. Keep it as is. What is your guys' vote? What is your vote, Scott?
You know what? I took the arrows off of my
Okay.
5-minute
Well,
because they
yeah,
would be,
for the 1 minute. Yeah.
for the 1 minute. I started after the call the other day. I started paying attention to the color of the 0 line.
Yep.
And watching that.
Because that's just the bias history.
Yeah.
I like that bias history. And the 0 line, just to confirm, the 0 line on this MACD, the way you built it, is the faster MACD 0. Is that correct?
It's both MACD 0.
Because those are different though.
No, they're exactly the same on this indicator.
Okay, how though?
Because I plotted them that way.
Okay.
If you try and drag 2 of them into one window, your zeros are not aligned. But because it's done this way, then the actual positions at which you get crosses like this are accurate.
Huh.
Because they're both working off the same 0. So those are repeatable measurements. Whereas if you're doing it otherwise, each indicator is auto scaling inside of that little sub window. And so they're going to move around. This won't do that. 0 is 0.
0, 0. That's what makes it using it right here and not the one on TradingView or the one on your phone. It makes it very, very different, just so you guys know. That's a key point, because when you try to drag and drop them both on here, guys, what's happening is they're kind of offset. Has anybody noticed that? So the way I did it was I put it as I only went off of the 0 line for the fast MACD for accuracy and consistency purposes. So this that you circled is a great, yeah, that's great. Who's breathing? Huh? Hold on. Mute all. Breathing.
I'm not breathing.
I just muted you. I think that was you, Donna. Was that you?
It was.
I hope so. I hear you. I just hear that wind in the background. CAD JPY and odd JPY are they going down? I see them going to the ADR low. And then for the guy who asked about the ADR, I really feel like these are kind of, think of them as support and resistance, think of them as almost magnetic. They think of them in that sense of the way, because when price starts to bounce around, there's a high chance it's coming right here before it makes any move to go back up. When price starts bouncing around, if it breaks, you're looking for the retest to continue. I don't mean the baby break on the 1 minute. I mean like a full break, like not a maybe baby, the all the way. Okay. The same thing here. So for us to come down here and everyone's going to assume it's going to bust off the 50, it probably will, but it'll drop to here before it goes back up. For sure.
Oh, what's the name of the indicator, Jenny? That ADR low and high.
I don't know. Let's find out.
ADR.
I'm pretty sure.
Just ADR. Yeah.
Oh, okay.
There.
It should be in the chat.
Okay.
If you're using anything, you should be using this. It's very helpful, in my opinion. So, in my home opinion, that's very good.
I love it.
All right, so this
It's
is
very
our
helpful.
last kind of question, kind of call before we go back into. I want the chat to become something where we're posting ideas, guys, bear in mind, there are 47 people on this call. So if even 5 or 6 of us post, let's just say 2 or 3 screenshots of, hey, gold's getting ready to move. Hey, CAD JPY is moving. And we got to, pick pairs that trade a higher volume than this. But if only, let's just say 7 of us, 8 of us, there's 48 of us now. So 8 of us post screenshots and we only post 2 or 3. So 3 times 8 is 24 in a day. So that means the people who are up at night and when I'm not trading, they may be able to post a couple screenshots. That means when mornings I'm not on, and let's say you were busy looking at EU and EU is just stalling out for whatever reason, but Mr. Scott's like, hey guys, check this out. Look what GU is doing. And we do this collaboratively. Do you realize how quickly we can hit quite a few trades? Now, mind you, you need to know what you're doing. You can't just take it as a signal. That's not a signal. This is still your independent trading, but that's the ultimate goal. And then the other conversation that was brought up last week, and I'm hoping that there's enough free thinkers on this call to collaborate with me and to have this equal conversation where we are all kind of putting our input in. So Scott had brought something up. I'm pretty sure it was him, but if I'm wrong, it's okay. He can have the credit. So somebody last week had brought something up about in tightening the stop loss. And I left a voice message in the group that said, hey, so here's the deal. I'm all for that. I think it's wise. I just feel like most of the time when we try to tighten stop losses on scalping methods, we end up hitting more often, which is the case. That is not Jenny's opinion. It does happen. But maybe there is a way that collaboratively between all of us, we can say, okay, what's a consistent, measurable, duplicatable? Those are the 3 key words. It needs to be consistent. It needs to be measurable. It needs to be duplicatable way we can tighten the stop loss. So like I had mentioned on that audio recording I posted in the scalping group, I had been known to take my entry and then place my stop, at the, most recent low within the last 10 candles, for example, or for if this one was slightly lower like this wick is. So if I went to take this buy and I said, I don't like that one, I might take it just a slight amount lower or based off of structure. So I've done this a lot of ways. And yes, if we can tighten our stop loss even by 5 pips, your accuracy would only need to be 87% to hit 6 figures. If we can tighten the stop loss by, 7 or 8 pips, your accuracy only needs to be 85% to hit 6 figures. So, and that obviously comes out in the wash because most of many pairs, trades you enter are going to only hit 6 to 7 pips. Some of them are going to hit 10 to 11. Few of them are going to run to that 20 when it hits your take profit, or like you're going to catch the whole move because it just pounced up kind of mentality. And a good percentage of them are going to be close above break even, right? And enough to cover your spreads and your fees, so they don't really count as a win or a loss. They just are there. They help with your accuracy percentage, but it. So does anybody, 49 people, have any input that we can, because again, I can come up with things, but I can't make you all see it the same way. So I'm 1000% open to your input of how to do that. We can't necessarily say the last fractal level, or we could, because that would be consistent or consistent enough between brokers. But does anybody have any ideas? Anybody at all?
That's what I was thinking was the fractal level.
Okay. So I'm going to go to, let's go to the actual pair. Let's go to the one that we're using the most. Ooh, gold dropped hard.
Yeah, it's often
not pretty. I was like, it's gonna react right there. See, God doesn't, there's an expression my mother says, is God doesn't like ugly. And I say that to everything. God doesn't like ugly. He doesn't like the negativity. Like, I was thinking, man, it's gonna push up. Okay, it's gonna push back down. It's got to react at this line. So, but it was definitely pushing up. If it hit your stop, I'm sorry, but we should see another push up to the top side. So, but we are on gold right now. So does anybody have any suggestions on any way to consistently and measurably and duplicatably, being the most important one? It's got to be duplicatable to somebody who doesn't know how to find their own support and resistance, to somebody who may be 3 years in or 3 months in. Anybody at all?
Well, the previous fractal makes some sense.
Mhm.
So let's find some examples. So if we took this trade as a buy, obviously that's a win. Let's say the bias would have been for us to buy, so we would not be buying there.
You're on the 5 minute too.
Yes, sir. Yes, sir.
Yeah, Jenny.
You guys have no idea. Donna yells at me all the time. She just
All
yelled
the
at me, you guys.
So that would have been a series of losses, those last entry arrows. Just the last one would have hit.
Okay, so let's take a look. Let's try to dismiss the arrows. Let's stick with the strategy for a moment. The strategy is the green is above the 0, right? 9 and 3 cross, we're above the 50, and this tells us, let's try to focus on the bias line. Hold on. Oh, I thought my niece were here. My family is flying in from Colorado. I thought I heard my niece's voice. It's my daughter. They tricked me. But okay, anyways, 3-9 cross, the bias says we're in the right direction. Okay, so we're gonna know we're in the right direction because of the bias line that Scott built in and the MACD lined up. So this one obviously is a win, right? That's easy. All of this, now we finally break out above the 0. This is an entry. So we got to find spots where the entry would not work or the stop loss would stink. That's ultimately to test a theory. I personally think it takes at least, a couple of months. Most people don't stick with one trading style for a week or a month, but that's my opinion. So same thing, we would be above this line right here says we are above the 0. Wait a minute, Scott, this bias line basically is saying that we are above the 50 on the 5 minute and the fast MACD is above the 50. Is that correct?
I'm sorry, I was looking at my charts for just a moment. Can you repeat that, please?
Yes, sir. Your bias line is built to say that the fast MACD is above the 0 on the time frame higher and price is above the 50 on the time frame higher. Is that?
Yes, and the 3 MACD or the 3 moving average is also above the 50.
Okay, so that's what this bias line is. That's why it's green. That's why the 0 line is green. So it would, in theory, here, and let's find out. This would be an entry because we came above the MACD. I don't think we didn't not get enough pips, but if you managed it personally, you would have won. Now, no one ever came back to hit your stop. So guys, can anybody dig through their charts to find me examples of where our idea that we're trying to come up with would lose? Because we would take that. The bias changed. The MACD is above the 0. We take that.
Well, as an example, just in the last entry arrows that appeared on the charts on gold. So just head right out to the end. Let me get my annotations here. From this entry arrow, I took a trade. So I set my stop just below this and it held through, and I took my profit somewhere right on the retrace in here.
Hey, wait, can you draw a straight line? So you took this entry. So actually I'm going to draw a line. Oh, I'm sorry. That was me. So you're saying you took an entry here.
Right.
Right. Is that right?
Yes.
It held. Now, what about the other rule that we would have to add if we decide to agree to this, guys, is you cannot trade at session open. And that's 3-4 times a day, because technically there's Frankfurt market, which no one considers. Sydney and Asian aren't nearly as impactful, so those are insignificant. But that Frankfurt open and close, which is 9 a.m. Eastern. Well, wait, the daylight savings time has changed that. Oh. Well, either way, Frankfurt, London, US, those are big enough to shake. So when the market closes, the US market at 5 p.m. Eastern and it opens for Asia, that's big enough to shake. When London opens, it shakes. the spread opens. So right here, this little indicator that shows us the spread, it'll look like this, then it'll look like this. It'll be huge. And having a tight stop loss will knock us out with a spread. And what you're saying, Scott, the only problem is, so if you said you took this one,
Right.
but if you, for example, had taken, for whatever reason, let's just go hindsight's 2020. We live in, it's 2020, guys. That's going to be my saying all year. It was my saying all last year too. So welcome to the club. Yeah. Oh, for the love of God, stop it. For conversation purposes, for us to grow and learn together, delete all selected. So let's say you took this arrow because you trusted your arrows, right? And
Right.
let's say that at the moment, hindsight's 2020, so we took it and we placed the stop loss. Where would you place your stop loss?
I would take it kind of at the bottom of the fractal as
This
it's drawn.
Or this one?
Yeah, there. That's the most recent fractal. But,
Yes.
you know, given that we're kind of trading a range here, I would probably take the lower of the fractals in that trading range.
Now that's what I would do, but do you think that that's duplicatable for the newbie? See, because if I saw, like I said earlier, before we even discussed this, like I was saying too, I think it was David, he had asked about that trading on multiple time frames. If I was taking a trade in this window and I had to pick a stop, I'm going to take the lowest. Let's say of this right here, of all these different ones, I wanted to have room to breathe.
Mm-hmm.
But people need to understand that, okay, so the lowest fractal in the last 10 candles, the lowest fractal in the last, there has to be some measurable, consistent rule that is duplicatable, because we can't measure accuracy and consistency if it's not direct. Is everyone following that there? Everyone at all?
Yes.
Yes.
Okay, well, you guys have to think about it. I'm gonna grab some coffee real quick. So maybe Donna, anybody. Okay, so what do you guys think about this? I want to hear what you actually have to say, but I gotta get coffee. I gotta get coffee. Well, I had water this morning, not coffee. So.
Yeah, where I grew up, we call that a Norwegian transfusion.
Well, I want to process that. Like, so guys start thinking about fractals or something. Where's my Derek? He can talk about somebody. I'll be right back. Barbara, somebody say something.
Well,
What
I'm
about
happy to
what
talk.
about the different pairs? How they have the different, they need different, they may have different volatility and they have to move different. Will that
Right.
matter?
It's,
Yes.
I almost hate to be bringing stuff up when Jenny's not here to, you know,
Yeah, to help us.
filter. But I think that the ATR of whatever time frame you're on, whatever pair you're on, is the key to this.
Oops.
Because a stop loss of like 1 or 2 times the ATR is probably a pretty good measure. But as far as what's easy for the newbies, that's a whole different question.
Yeah, that's true.
Now, I could, if we have a calculation for that, I could build this into the indicator where it draws a line where the stop loss would be. Or puts a little arrow or something like that on the chart to show the stop. That's entirely possible.
If you could do that, that would be awesome.
But we would have to decide what that would be.
Yeah, it's true.
Yeah, for different pairs.
Now, if it's based off of ATR, that's an easy calculation. It would adjust to the pairs.
Yeah.
But we would have to back test that and to know, you know, how we're doing. But if we're charting, if every time we have an entry arrow, we also put a stop loss level on the chart, that would give us a good indication and easy to go back and just take a look at it and back test it. But like I mentioned last week when we were talking about this, I think I'd like to build myself a little EA to take the trades And then we get statistical information about, you know, what our accuracy rate is and what our ultimate P&L is. Easy to go back and back test a whole bunch of data.
Yeah, like the
And
one
since
that
all the,
you were talking about before, right?
yeah, and since the
Yeah.
indicator is already doing all the heavy lifting, it would be pretty easy to write the EA. Well, the thing about the, you know, doing an EA, just taking the trade signals blind like that, is that it would have no knowledge of structure and other things you might be using to filter your trades. I still think that an experienced trader can do a much more accurate job than the EA is going to.
Yeah, because people would have to understand they can't just rely on it.
Right. Well, I probably would never release the EA. I would just use it for testing purposes.
Just for testing, okay.
I feel like it's kind of a big step moving from writing an indicator that gives you possible trade entries, and you're still the one pushing the button, to writing an indicator or writing an EA that is going to take trades for you. And I don't like having that sort of thing be risking people's fortunes.
It's hard to make those decisions. Honestly, so I'm going to tell you the truth. There's 50 of you on here. So sometimes I say I have to go get coffee just so I can check on the children or do something, or sometimes I have to pee because I'm human. So like, yeah, sometimes I'm like, I just have to walk away for a second, guys. Sorry. Just public service announcement, just so you guys know. When you're on here for hours and hours, it's a real thing. So, but now that that's over, what did you guys kind of brainstorm in terms of stop losses?
Well, I talked about the possibility of using multiples of the ATR for whatever time frame, whatever instrument.
But it has to be, so I like, now you had mentioned that last week, but
But what I talked about is possibly modifying the indicator to actually draw that stop loss level on the chart.
Now that would be duplicatable. So that would, that's okay. That would be duplicatable. But otherwise, when you're asking people to do that, they're going to say, well, right here, it was, you know, they're going to, oh, but plus that would be such a fluid number.
Yes, it would be a fluid number.
Hello, guys. I'd like to chime in for 1 second. Let me cut the back noise out. This is Dietrich. I want to say Happy New Year's to everybody first and foremost. That I love you guys. Y'all the best in the world. We all know that we're gonna be the best in business. But when it comes to the ATR, I was told once 1.5. How do y'all feel about that? 1.5 the ATR for the stop loss, but take profit at 2. I mean, depends on what chart you're on. Of course, if you 4-hour charts and you might want to be very mindful of your lot size, you know, if you're doing monster swing trades. But for this scalping strategy, I would say 1.5 and take profit at 1. Yep. And then start like when you, because y'all taught me about stacking, take the most profit off at 1 of the ATR and then run the rest with the trailing stop or whatever you want. But the stop loss, I'm suggesting should be 1.5 ATR for that time
that's
frame.
what VP recommends also on the no nonsense Forex.
You'd see, I like no nonsense Forex, guys. So I'm typically on board with what he teaches. So 1.5 though, keep in mind how fluid it is.
I know
it's pretty tight.
Oh, there's a gentleman picking up. Who is that in the background? A little muffled.
I said, it's funny you said that because that's exactly who I was talking about. I didn't want to mention anybody else's name. I said I heard it somewhere, but yeah, 1.5 ATR.
Okay, but guys, bear in mind. So that's what I love about this group is how like we can talk and share a lot of ideas. So right here, let's take that off, I guess. So this is 1.5 here, okay, versus here is going to be a pretty decent difference. And plus this is scalping. So for no nonsense Forex, great guy, great information, love it. I love his strategies, but I think for scalping, we'd have to make that a little bigger than 1.5 personally. And besides, our take profit is going to be bigger than 1.5. So if our take profit is, what's the highest gold typically get? So we're going to use gold as our case study, right? So gold, this is 6 pips in 1 minute, right?
Right.
The lowest is what, 2 pips.
I can actually look at the numbers on the scale over on the right-hand side too. So it's,
Okay.
7 pips down to about 5 pips.
And remember, this is technically a 5-minute strategy. We're taking entries off of the 1 minute. This is a 5-minute strategy. So for conversation purposes, let's go to the 5-minute chart. Okay. So we're on the 5-minute on gold. This is 18 and 1.3. So your spread and any fluctuation in the widening of a spread, if you, for example, had a 3 pip stop loss, do you see how that might be problematic, guys? If we did a 1.5 the ATR?
Yes.
We can also add the spread.
So Scott, how would you do that? So Scott, if you did, because the highest is 1.8, the lowest is 1.3. So 1 and 18.
I would do it at the time that the entry arrow comes in. So I would be pulling the ATR as a snapshot at the time the entry arrow comes in. We'd probably want to have the ATR value maybe not as long as 14, maybe shorter, 10 or so.
I think I told you how I saw this indicator last time, well, maybe a month ago or something. So remember, Scott, when I said, look, when I see it low, I'm waiting for it to go high. You were like, God, I never saw it that way. Do you remember me talking to you about that?
Yeah.
So the problem is when you take this one, so let's just fish in the dark together, delete. So we're going to fish in the dark right here at the peak, somewhere in and around the peak. Remember, I just dropped it. Nothing zoomed in.
Yep.
Now we're going to zoom in, fishing in the dark. Okay. Once price usually moves this much. Okay. So for example, we took, come on, silly booty. Here. Oh, that more than one. It doesn't turn back to a green bias for a while, so that could work. That could work. But when it gets this high, 1.5 times the average trading range here, that would be even a bigger stop loss than we currently have. That would be a 36 pip stop loss.
Well, you're on the 5-minute.
True. But I would want to pull it from the 5-minute because pulling it from 1 minute is too small, guys. So
well, then maybe we don't do 1.5. Maybe we do 1 from the 5-minute because it's a higher time frame than what we're trading.
Say that again.
It's a higher time frame than what we're trading, so maybe we want to do a smaller multiple.
So,
because remember, when VP talks about his 1.5 and as a stop loss and a 1 as a initial take profit, I think he takes half off at the 1 ATR.
Yes.
What he's doing there is everything is daily. So that's based off of the daily time frame for everything. He's not taking from a next higher. He's taking it from the time frame that he's trading on. Everything is daily.
I know, but remember, this is a 5-minute strategy. So when we put that in play, our take profit, I would still want to keep a comparable take profit than what we're seeing right now. Let me do that again. Comparable take profit of, what is it? I have it 23 pips, okay? I'd want to hopefully catch that 23 sometimes. I don't catch it all the time, but I catch it enough times to outweigh those break evens and outweigh the losses. So I would still want to be aiming in around this. 10 pips is you're most of the time you'll get 10 pips out of this. Most of the time out of this strategy. So if you're mostly getting 10 pips and sometimes getting 23, for example, the stop loss, anything less than 15 is sufficient. So could you program it saying 1.5 times the average trading range? Because right here, that would be 15. But right here, that's not enough to even breathe.
Well, what I can do is make that a variable that you put on, you have a parameter on the input. So you can say how many times the ATR. Do you want to set, make your stop loss and take profit appear?
Could you, ooh, how about this? Could you do something on lines, odd JPY is dropping still. I'm in profit. But anyways, so could you do something along the lines of, wow, you're my hero, thank you.
White cheddar, pepper, salt, a little salt.
I love you.
Love you.
Thank you. That's my oldest son. So they're home for Christmas break, so.
Nice.
But could you do something on the lines of, let's say 1.5, the 8, ATR, not less than, 7, not greater than 15? Could you do something on those lines?
Sure.
What do you guys think of that? Because then it's something measurable, it's consistent, and it's duplicatable. Anybody have any input on that?
And that might work too, since the different volatility per pair, huh?
Yeah, well, we'd have to give it room to breathe. I mean, so that's my only issue. Like right here, for example, this is, so 1.5 times 1 pip. What do you got, like 2 pips?
Yeah, but look at how small the movement is. So if we take a look at like where this entry arrow is down here, whoops, I've got a line on. But where we have this entry there, our ATR is quite small down here. And we're not doing very much movement. So, do we want to hang on to that to try and get to 22 pips? Or do we want to take a short take profit and take the next one for a short take profit? Because if we're changing, well, that's going to be another interesting thing, because our lot size couldn't change based off of the ATR. Because if our take profit is changing, if it's shrinking, we would be setting our lot size for the shortened ATR. So we would be trading bigger.
No, I would want to keep the take profit the same. Well, here's the reason why. No pun intended to anybody else, but this was tested with 4 very successful traders. So to some extent, I'm all about collaboration. Let's improve it. Let's make it better. Let's grow. But to some extent, I want to remain consistent. So this strategy just made somebody $500,000 in like less than 2 months, just so we're on the same page, using 1 pair. So one of the guys that I did this with, he hit 500,000. One of the other guys, he actually hit 200,000, but then he blew half of it on NFP. He only withdrew 1. They did that in a few months, just so everyone's on the same page. Months, you guys. They didn't start with thousands of dollars. They started with a couple of hundred. So I really
Which pair was that, by the way, Jenny?
Gold.
Okay, gotcha. Thanks.
Well, no, wait. One of the
That's
guys.
awesome. That's awesome.
The guy who hit 500,000, he only used gold. The other guy, he likes GN. I don't even like GN, but he likes GN and gold, and he does the GBP pairs too and gold. So, we're all a little different. We all have our different, ways of seeing things. His favorite one is actually GN, which is not my favorite, but more power to him. So either way,
I'm looking at GU. It moves really nice and has a really tight spread.
There you go. So I want to stay consistent with our take profit. If you guys don't mind, let's please stay true to that, because that works. Now, what we're trying to do, so let's keep the main thing. Our goal right now in this conversation is to tighten the stop loss. So if we keep that the center focus of this, I'm on board with maybe creating that, upgrading the indicator. Scott, you were doing so much work. We super appreciate you. I'm going to have to buy you and your wife dinner or something. I'll send you a gift card because we're not close enough, or you fly out here and I'll take you to some nice places. Either way, point is, if you want to create something that says, okay, let's do 1.5, the ATR, not less than this, not greater than this. Okay.
You're talking about the stop now?
Only the stop. I'm not talking about the take profit. I don't want to mess with the take profit, because again, guys, that works. So I don't want to reinvent the wheel and be that person who tries to always is trying to find a better way,
Devil's advocate though. As you change trading pairs, if you're trading something that's only moving 50 pips a day, you don't want to be going for 22 pips.
This is true, but that's why the whole strategy is written off of not trading pairs that trade less than 100 pips a day.
Yeah, but if you think about it, there's nothing wrong with the strategy on smaller moving pairs, but you just have to adjust your take profit and your stop losses accordingly.
Okay, so to confirm then here, you got a pen and paper? What? Clearly your brain works super well. So here's where I sit on it. Make something that says, okay, the stop loss is 1.5, the trading range, not greater than, not less than, and also include the spread. Okay. You'll have to include the spread because obviously if it widens, that has to be part of it. And also you can, do something in terms of the take profit. So potential take profit with both of these features being able to be turned off. Okay. So for example, the take profit would be, I would want to go for 2 times or 1.5 because we want a 1-to-1 essentially, right? So
Yeah.
1.5, the ATR, not less than, 10 pips, not greater than, let's say 30 pip or whatever the.
Although what I'm thinking is that, well, we set an initial, that take profit of maybe 1 times the ATR or something like that is where we do our profit lock.
Yes. That makes more sense in terms of a profit lock. Well, could you label it? So this is your profit lock. This is your take profit. Because those are different.
Yeah, however, we can't, well, I guess we do it manually. That way we just do it as a support of the manual dragging of the lines.
Yes.
We can't interface with Ron's right now. Although I'm working on that.
So think about it. If you labeled it, so put, stop loss and labeled it take profit and profit lock, people would know exactly what to do. I know y'all's look a little bit different than mine, but if you labeled it, then they would know what to, well, no, because then, that would be Ron's works on every trade you open.
Right.
So
that's the problem that I'm dealing with right now and trying to rewrite it. And I think I figured out a way to make it all work. And it can even be Ron's can be operating on a different a different platform altogether and still be dealing with everything. And it's just going to keep track of everything itself as to where everything was. But that's going to require that we have another EA that runs on each chart that we use to take the trade and set certain parameters that Ron's can read. So I'm trying to figure that out. And this has been kind of the sticking point.
Now that I don't have a bunch of input in. Last week I said that NZD JPY was the only one that didn't push down hard yet. This is probably one of your best NZD pairs you can take. Well, sorry, JPY pairs you could take because this one has not retraced yet. And all the JPY pairs just pushed down a ton. Odd, CAD, US. Just so you guys know. Sorry, I had to interrupt you. Let's see. Okay, well, I guess we can work with that. And then obviously you can also do something on the lines of the fractal, the fractal within the last 5 or 6 candles. You can do something like that to tighten it up. But your accuracy is going to go down at first, and that's okay if you understand that you're gaining a skill set. You are, just do 0.01s until you get the hang of it. As long as you guys understand that, okay, your accuracy is going to decrease anytime you tweak. Every time you make a tweak, it's going to go back down for a little while before it stables out, and then you have a better comprehension. So very, very, very common for that to happen. Don't be freaking out that happens. Understand that, okay, so we're changing something, the accuracy will decrease momentarily as you're getting the hang of it. Plus, when you tighten the stop, it's definitely going to decrease. But that's not a bad thing necessarily, because if your risk to reward is better, you can technically have a lesser accuracy ratio, risk to reward ratio, and still be very, very profitable.
Yeah, right now we need to be about 67% to be break even.
67 with our current,
right, with our current stop loss and
take profit or full take profit.
No, it's 10 pips. It depends on what your average ends up being. If you're averaging around 10, 12, then your stop loss is double your take profit. It's kind of looking at the average metrics.
Guys, this is all numbers. So if you want to hit six figures either in the next few months, or let's say, let's be realistic. I talk about this a lot, and I'm definitely the pie in the sky kind of girl. That is who I am. That's got me pretty far in life. But I'm also very realistic in terms of, I don't know what your personal budgets are, but if you can afford to, say I can commit to putting $100 into an account every 2 weeks, if you can afford that, or whatever it is that your budget can look like, and you do that, let's say that you blow it. Let's say you make a mistake 45, okay, 40 weeks out of the year, but only twice you turn that account into just six figures. You never hit seven, just six. After everything comes out in the wash, taxes and fees and everything else, you still made close to $200,000. I mean, even with the 2,400 you put in there, or the whatever, like you still made shy of $200,000 after you pay taxes and fees and stuff. So it's very doable. Just stay the course. Yeah. All right. Any other questions, suggestions, comments? Anybody at all?
So just to talk about this a little bit more, what I'm thinking about doing with this, and let's see what your opinion is. So if we are taking a trade, let's say just pick an arrow, any arrow, this one.
Okay.
So we take a trade here. What I'll do is I'll show like a little red X below, and that's the thing, that's our stop loss.
Okay.
And that will be at the level. So you can kind of consider that a line. And so you drag your stop loss up to that level. And then we can have an initial take profit. I'm not sure, maybe.
Ooh, how about a yellow and then a green? So like if this is a red X, this could be a yellow for your target lock, and then the green would be your take profit.
Sure.
Just an idea.
Yeah, we could do that.
They're suggested uses. These are not like, this is not written in stone. This is just to help you guys figure it out, help you tighten it up a little bit. So that would work. But
so then I'll have parameters in the indicator to set the multiple of ATR. So you can adjust that and play with it and find out numbers that are working for you.
well, I know
gold is booming up, by the way.
Yeah, now that it hit everyone's stop loss. Everything's moving now. All my JPY pairs are in profit. I'm up a lot on my swing account. A lot. I jumped in.
Yeah, yen is really strong.
Yeah. Well, we knew it would be. We knew that it was going to push hard. I didn't anticipate gold to go up, though, to tell you the truth. I did not anticipate that. I was wrong about that.
Well, gold and yen are often correlated. They're risk-off currencies and metals.
Okay, so two questions for you. Actually, one of them is a little off topic. So, but can you, if for example, we took this entry, this cross, let's use gold. I know this is too high of a time frame, but we took this arrow as an entry.
Yep.
When you're looking at that ATR, is there any way to factor in the fractal low, like the last 2 or 3 fractal lows, and to say whichever one's greater, or is that too much in terms of the coding world?
No, it's quite doable.
I think it's beneficial, or
but let's just take a measurement. What is the ATR level at that point?
So at this point, where that arrow is, it's really low. So it's 34, right?
So 3.4 pips.
No,
so go 3.4 pips from the candle at which we entered.
Oh, here. No, this is the bigger time frame. So that's definitely 34 pips.
Oh, yeah, you're right. It's for 4 hours. So
here, I'll go to the smaller time frame so we can stay consistent with our discussion. There we go. So let's say we took this one. We have our crossover. We have a bias up.
Well, that one's an obvious win, but we can go ahead and take that. So what's the ATR right there?
The average trading range right here is, what is it?
5.8 pips. So 5.8 pips. So 5.8 times 1.5 is 8.7 pips. what's 8.7 pips time, from the close of the candle, of that entry candle?
In the close of this entry candle.
We want 8.7 pips. Just showing the 8.7 pips, that's going to be down in there.
Plus the spread.
Plus the spread, which is about 1.
Okay.
And if we're going for, let's say, a 3 times ATR target, that was 5 point something pips was the ATR.
Yeah.
So 5 points, I don't know, forget what the number was now.
5.8. So either way, you're looking at 18 pip take profit and a 8 pip stop loss. So we'd have to look at 3 times the ATR to make this a cost-effective strategy, like for the take profit.
Well, although we still have our trailing. If we set our take profit out further and let it trail up.
Yeah, that's a 40 pip move on this one.
However, it depends on how big your, how large of a retrace you're allowing with the trade manager. Because, that first push up does a pretty good retrace from that peak down to the valley. Yeah. It would have taken profit in there somewhere.
That's a 10 pip pullback. So
yeah,
your trailing stop would have knocked you out of that. My trailing stop would have knocked me out of that.
Yeah.
Huh. Okay.
But, you consider that we're pushing more like a 3-to-1 risk reward ratio, which gives us a much better chance of living to fight another day. If you take the full 25 pip stop loss, that's pretty painful.
It is.
Especially when you're setting your trade size to a 10 pip take profit.
A 10 pip, yeah.
Yeah, so that means that you're actually taking, if you've got a 20%, or what were we doing, 17, something, I forget what the number I'm using.
30% risk.
But it's a pretty big loss. You can lose a third of your account with 1 loss.
Okay, so just out of curiosity, would you reconform the take profit to be 3 times the ATR? So the lot size is a lot more conservative?
I could.
I think that's pretty doable. So action items are as follows. When I was first learning, I was doing break even. Leisha, I know you're doing pretty good. I think you are, but steady. Yes. Okay. So real quick, action items are reprogram the lot size to be 3 times the average trading range, which right here is obviously it's minuscule, guys. This is nothing. Well, no, just to show you the lot size. Okay. So that would be only a 12. It would show us the lot size for that, which still makes it slightly more conservative. Action item number 2 is put the 3 X's for stop loss, target, pip lock, and possible take profit. So green, yellow and red kind of mentality based off of the average trading range, which we're going to say is 1.5 for stop loss, not less than what, and not greater than what, just to confirm.
Now, do you want to do the what in terms of just pips or points?
We can do it in terms of pips, or we can do it in terms of the fractal. I'm okay with either concept. I just remember we have to add the spread in there. That's definitely a deal breaker for me. So we can say not less than 7 pips if we wanted to, but then that's still going to mess up with the whole risk to reward. It's going to be such a fluid concept.
Well, if they're based on the same ATR, then
Oh, true. Yeah, I guess you're right. Yeah.
they'll stay in line. The spread, however, as I've been kind of watching the correlation of spread versus ATR.
Yeah, that's
And
what
when those numbers get too close together, it's really kind of not worth trading. And I could almost make that a filter.
Okay, so would you say weight based on, would you have like a little alert right here that says weight based on spread? Because
Or just not produce any arrows.
no, because then people are, we have to think aside from this moment. So in this moment, there's people on the call who are kind of just listening in, but please understand that if we tell them the arrow does this, this, and this, we want the arrow to continue to do this and this. So if I had to say, I would have the arrows continue to produce, but I would have like a star or a line or something that say hold based on spread. This way, number one, as we back test it, we can see why or how it would have performed. So that's a benefit for you and everybody else. And number two, it doesn't beg the question so much when we're dealing with people next year. Because this indicator I'm going to teach, I think there's 4 for sure, others. I have a total of 10 that use something like this. So it's going to be around a while. So we want them to use it and understand it and not have a bajillion questions next year. So I would probably do something along those lines. If it's self-explanatory, then there'll be a lot less Telegram messages and what about this is,
Almost like a caution.
Yes. Just caution based on spread.
Newbies, yeah.
Maybe what I could do is kind of over here, have something to say, low ATR or some kind of a caution message over there that just stays on during the time, kind of like the bias stays on there.
Yes. So say caution based on it can, but if you can, please say why. Because I promise you that's going to make your life easier and mine.
Yeah, no, I agree. I just need to come up with a language.
They're going to say, well, what is this doing? I thought you said it did this, or Jenny told me this. I'm going to say, listen, Linda, listen.
So correct.
Yeah.
Listen. Hey, actually, I'm going to change the topic for a second because I know you said you owned a recording studio. So
Yeah.
I didn't place the order yet for that microphone because a friend of mine said, why don't you just get a Bluetooth headset?
Oh, that'll work too.
Which do you think is better? So the reason why I'm purchasing this is because I want to be able to walk. I have one of those electronic desks that, lift up and down.
Yep.
And then I have like the base only walking treadmill. So it has no like stand in the front of it in my office, and obviously a ton of other desks. But the purpose of me purchasing this item is that you guys can hear me without necessarily the treadmill's not very loud. It's a silent one, but so I don't have to like sit with my face in front of my screen. So which one would you recommend? The nice microphone that you had told Derek about, or a Bluetooth headset?
If you don't mind wearing the Bluetooth headset, I don't see a reason not to do that.
I don't know if I do mind. I think it would annoy me.
That's the reason that I would consider, is that it might be annoying.
Yeah. Because then it's gonna like stuck to me and I'm like, okay, I wonder what the range is to, interference. I guess
Bluetooth is pretty darn good.
Yeah, okay. Well, if you have a recommendation on a headset that Bluetooths to a Mac Pro desktop thing, then let me know. So
Bluetooth is really isn't going to matter as far as what platform you're running, as long as it's got Bluetooth and the Mac does. You should be good to go with that.
Well, with the best sound from my genius guy here, from you there.
Well,
no
that experience there, so I can't quite tell you.
Okay, fine then. See.
However, the Bluetooth headset, the nice thing about that is the microphone is right up next to you, which means that it's not going to be picking up too much room, and it should be good.
Yeah, true. This is true.
So I would go to a store where you can put them on and see what's comfortable.
Okay, thank you, sir. I appreciate it.
Yep.
Thank you. All right, guys, any other, who is that getting ready to talk?
This is Jeff in Scotland. How are you?
Hi, Mr. Scotland. How are you?
I'm good. Happy New Year.
Happy New Year.
A couple of questions. So I'm very big if the wheel isn't broke, don't fix it. And you know, the other traders you talked about who'd made 6 figures doing the strategy, how many hours a day were they spending doing the strategy?
Okay, so the one guy, he's got a unique kind of situation. He trades like the end of London, beginning of New York. So anywhere from, he might be done in 3 hours, he might be done in 6. It just depends. And that's the guy who only does gold. So for him, he has to babysit a little bit more, but his life circumstances and his schedule permits that. So there's that. And then the other guy, I'm not nearly as close to him, but my understanding is he has a 2-3 hour a day limit like I do. So he'll take as many entries as he possibly can. And he doesn't have a limit on how many though. So he'll take 20 if he finds them. He doesn't have like, I have a limit that says 10 a day. He doesn't have that. So my understanding is he has a time limit that's either 2 or 3 hours. I forget which one. I think it's 3. And that's only 3 hours. That's it. Like, so as many entries as he can find, that's what he does. Now, bear in mind, so remember, I wrote it in the chat to try to explain it, and I'm going to say it again. This is going to be a great audio for people to listen to. They'll learn so much. So is what you're doing. Now, I have a few extra things on here that we don't necessarily need. So for conversation purposes, let's get down to the nitty gritty. Oh, I have to get rid of my 33. How sad. Are you sure? Okay, I'll get rid of it just for conversation purposes. Let's see. I will delete this one. So the concept is pretty simple. The 3 and the 9 cross and the 50. So you are taking it based off of this fast MACD only when it lines up. So on the 5-minute chart, you want the 3 to be above the 50 SMA. This is an EMA. This is an SMA. You want price in the 3 above the 50 SMA. You want the fast MACD above the 0. And we did say 2 lines. So you see the vertical lines, 2 vertical lines, because anything less, you get stuck in this kind of nonsense and you don't want that, right? There's still no guarantees. Now, granted, they manually move their stop loss. So when they're in profit, they keep the profit. They're never up 2 pips and then lose it. They are very good traders, okay? So that is a factor as well. They run trade managers to catch the rest. In fact, the one who made that much, he has a really great trade manager with that other company that I told you guys about, but really great one. And he'll let his run. So his will trim portions off, which again, guys, that's very beneficial. BP Morgan does it. A lot of people do it. I do it. We trim off a percentage of our trade. So again, this is a 5-minute strategy. We are taking re-entries or entries off of the 1-minute chart. The rules are you're looking for the 3 and price to be above the 50 SMA, fast MACD, drop down to the 1 minute. If this is breaking above the 0 line, because usually if this happens on the 5-minute, what's going to happen is it's going to pull back on the 1. So you're going to get the better entry, right? And or if this happened on the 5-minute, what's going to happen is you're going to see the slow MACD. See this slow MACD? Okay, that's why we still have it on here. We haven't really got into that because trying to teach hundreds of people from different levels of learning full strategy is so difficult. So what's going to happen is on the 1 minute, if you've already missed this moment, you're going to see this moment. You're going to see the slow MACD. The best entry still, though, is the fast MACD coming back to retest right in this window. When it breaks above the 0, that's your next entry. Are you following that? And that 3 and that 9 cross. Because you're going to get a lot of 3 and 9 crosses up. 3 and 9 cross up. This one kind of touched and rejected. 3 and 9 cross up. You're going to get a lot of them right in the same direction with the trend. Does that make sense? Anyone at all?
Hey Jenny, yeah, that makes sense. This is Brandon. I wanted to. Today is the first day. I've been listening to the recordings, and I didn't want to scalp at first, but after hearing you guys, I'm interested in it. But it does make sense. But are these all buy signals going up, or are there any? Because I noticed there's a lot more buy signals than sell signals.
Well, right now gold is running, so that's why. Here, let's go to CAD JPY. That baby is selling.
Just like in general, not just for the gold. It's just I've been looking.
Sell. This is all.
Okay. So it's just the pairs I was looking at.
Yeah, that's why.
Okay.
So think about it this way, Brandon. If you find a few scalps, I don't know what your schedule and your lifestyle is, but if you, for example, find your swing trades and you dedicate and you time yourself, for the love of God, quit being the person that sits in front of your chart endlessly. Give yourself 30 minutes to an hour at most, 3 times a week to find your swing trades and walk away. Don't check that account. Don't do anything. You should have managers running, allow yourself to check it once if you want, but that's it. The whole concept of scalping is I'm not a huge fan of it. I have been able to make 6 figures with scalping and it's fun and it's exciting, but it gives you something to do in the morning. So, because most people are, forgive me my French, but they're screwing up their swing trades because they're tampering with them and they're checking them and they're looking at them and they're, thinking about them. Scalping has that psychological benefit of, okay, I'm going to schedule an hour and a half or 2 hours or whatever. If it was me you were asking, I would say 2 hours a day. If you're, you don't have a day job, that I'm going to just scalp and I'm going to be able to play with the market and look at the charts and talk charts, because let's be honest, we're all a little addicted to trading. We're all a little addicted to learning. So
a lot. Yeah, we are. And I've been looking, I'm trying to just see more videos so I can get more of the concept of it. So this becomes, I guess, more concrete for me. But so I've read the pinned message what we're doing, but I can't seem to find, like my chart does not look like your chart at all. I know it's got the 50 SMA and then the 3 is in there, and I think you just had the 33 that you took off. But I don't have. Is there a video that shows you why your chart is set up, or is this just something that you does everyone that's scalping set their chart up like that, or does it not necessarily have to?
Well, at the end of the day, like you said, or I think the gentleman before you said, there's no need to reinvent the wheel for what actually works. So let's try to stay true to it to the best of our ability. Now, having said that, we all have a little bit of different eyes and skill sets and knowledge. So it's not bad to have it slightly different. But what do you mean yours is different? This is
like not the MACD, the actual chart. Does your chart the actual chart the way it looks? Mine doesn't look like that at all. Yours isn't. Mine's set up, I guess, more with the stair mat. Well, I mean, you probably have that saved as one of your templates, but
yeah. Okay, now I see what you're saying. So yes. So ready here. I'm not going to stay on too much longer, but here we go. Let's go to chart window.
Okay.
And this will be on this recording too. This happens to be CAD JPY, but let's build this together. So it's super simple. It's super easy. I'm going to go here and I'm going to add the most important thing. I even have a folder that says Scott. So we're going to version 7. Okay. I'm not going to, well, I guess I have to. I have to be a good person. So I will change the settings on this. The sounds, he turned it off. So no annoying sounds. That's pretty nice. The next thing is I have my set to next higher time frame. I have that at true because of how I like to trade and how I like to see it.
And that's the default value.
And that's the default value. I think that even everything but the fractal comes default, right?
If you're turning fractals off, they're on by default.
So which one do I turn off to take off the fractal? This one, right?
That you do all of the things that show fractals. So fractal breaks, fractal formations, all those would go to false if you're trying to take that all off. Now, the fractals, by the way, if they're being displayed, they'll show a message, but they will not paint an arrow.
So how do I keep it to where they show the lines, but I don't want the arrow for the fractal breaks?
They do not show an arrow for the fractal break. You can have them all true.
Okay, then I'm going to keep those on.
It will show a message.
Okay, I'm okay with that. So basically keep the settings as is. Just put my foot in my mouth. Sorry to overcomplicate this, but we're trying to be real with you. So show the estimated lot size. Currently we have it set at 10 pips. So you could do your percentage of growth. If you wanted to be a little bit more moderate, you could set it at 20 pips. Oh wait, percentage.
No, you're going bigger.
I'm seeing, look at me be wrong in public. This is fantastic. Okay, let's try this again. 10.0. That's the percentage of growth. And now this one, we're going to put it at 200, which is 20 pips. That's going to lower my lot size quite a bit. Okay. This is what determines your lot size, and everything else keep the same. I'm going to hit OK. So this is a new clean chart. Okay. Now that's it. I've got on there. I don't really need the rest of that, but I will go to, no, I don't remember. I think it's in We the People.
Friend. Oh.
No, right? Now you guys are really gonna make me think.
Only thing you're missing is the EMAs and fractals.
Okay, I was gonna put all my other stuff. I was like, yeah, I'm not doing that right now. I don't even remember what it's called. So we're gonna go to this. And so here we go. We need the 3, right? So we're gonna make the 3 the gold color. It's exponential hit. Okay. We're going to add another one, moving average. We're gonna make this one the 9. I'm gonna make it like aqua. It's exponential. I'm gonna hit okay. I'm gonna double check and make sure this one is the right one because I'm pretty sure it's the EMA. I probably have it wrong. Edit. We want this to be the SMA for the 50. Check. Okay. And that legit is all you need. You don't need anything else. You don't even need the fractals.
Okay.
Fractals are great, but people are misusing them on this strategy. So if it's confusing you, take them off. Actually, somebody took them off and then they went from a really awful percentage and then to a high percentage, just to give you an idea. So if it confuses you, take it away, period. Okay. All you need. You don't even need anything more than that.
So when the 3, which is the gold line, crosses above the 50 SMA, that's an entry?
On the 5 minute. So I'm going to repeat again. Okay. This is a 5-minute strategy. So what we were doing when we originally started this was this. Okay, let me go to here. But our very own Mr. Scott there, he built an indicator that made it to where we only have to have one chart open. So when we originally started this, this is what it would look like. So me and my buddies, this is what we did. We had our 1 minute open and our 5 minute open. Okay, that's how we did this. We didn't have a fancy indicator. We had to calculate our own lot size, and we were not always accurate because it's harder to count them per pair. So once we had the crossover of the 50 on the 5 minute chart and the MACD, the fast MACD, right, was below the 0 line, we went to the 1 minute to look for entries. We were looking for 10 pips, mostly on pairs that had over 100 ADR. So that was kind of the rule of thumb. Pretty much that means gold, GBP. I think somebody played with silver. I don't know much about that, but I believe silver was one of them. So that's it. Nothing else. We did this mostly at the end of London, early New York. Almost every one of us did this. One person, the Asian, very, very mildly, but that's their world. They know the Asian session. I wouldn't recommend this in Asian session personally, but that's just me. Okay. So if this lines up on the 5 minute chart, you're going to keep taking every cell you can. You're going to manage it and you're going to babysit it. So the 3 and the 9 cross is an entry as long as it lines up with the fast MACD. Okay, that's it. Okay. Really all you're looking for. You're going for 10 days. And
so with having this, with the indicator, you can really just check that and then wait for an entry arrow and then check the chart so that you only have to have one chart open. Am I right on that, or is that?
Yeah, so now you could either A, have one chart open, or B, have different pairs open so you can catch more than one pair. So now rather than having both open, I just have to know that this is already telling me I'm in a bearish bias. Sometimes it won't hurt to double check of what's happening on the 5 minute chart, but either way, all we're looking for is we're waiting for our word to say it's bearish. Our center line will tell us the bias if it's neutral, if it's bullish, or if it's bearish, because he programmed it to be his center line. If it's my selling color, it's bearish. If it's gold, it's neutral. And if it's buying, it's not buying anywhere right here, but if it's buying, it's green. See how that center line is programmed that way?
Oh, okay.
Center line tells us everything we need to know from the 5 minute chart.
Okay, cool. So, okay. So right now, like it's it's purple or orchid. So that's saying that, see how it's, what does that mean
you
right now?
You tell me.
So that means that it's,
it means that our bias from the 5 minutes is bearish.
Bearish, okay.
Meaning it's below the 0?
Yes, so
on the 5 minute?
Yeah, so that line in the center okay, anywhere from here actually, says that if we click on the 5-minute chart, which we're gonna do, this one line tells us that price and the 3 EMA is below the 50 SMA on the 5-minute. It also tells us that the green fast MACD is below the 0 line on the 5-minute. So now let's go to the 5-minute and see if what he built is right. And booyah, it's right. Price and the 3 is below the 5-minute, and the fast MACD is below the 0 on the 5-minute. See?
Yeah.
That's it.
Jenny, it's 10, just let you know.
It's 11 a.m. your time. My time.
Well, it's 11 o'clock your time, yeah. So.
Thank you. I appreciate you. Does that make sense, guys?
Mm-hmm.
Yeah.
The other thing that I like to have on my chart is a 250 moving average. And that is 5 times the 50, which gives me an indication of what the 50 moving average price is from the 5-minute. And that tells me that when I'm approaching that line, I know that my bias might be changing.
Okay, so that's another good way to do it. Some people put like the 200s, and people have so much stuff, it's not even, and if that helps you, ultimately, it's got to help you. So here, I'll put it on here. Do you have the 250 EMA or SMA?
SMA.
Okay, I'm gonna make this one blue. Or whatever color I accidentally just made it.
And the white arrows are multiple different triggers, correct?
Don't worry about the white arrow. Just
No, he's talking about the white arrows on the timeline or on
the
map.
histogram.
Okay, yeah. Okay, yes. The triggers that he has programmed are the 3 and the 9 cross, right?
Now that one right there is bias change.
This one's a bias change, but he has the 3 and the 9 cross, the bias change, and the break and retest of the 0 MACD.
And Jenny, the reason I put that bias change in there is because you get this bias change here, but there's no other triggers up there.
True.
And so this gets us into that move.
Yes. I like that one, actually. I've never used it, so I like it.
Yeah, I like it too, Scott.
And to be clear, if we were doing closed candles, that would be different.
Yeah.
Now, as we're talking about that 250 moving average, you see here when price is coming down close to that 250, that's when we get our neutral bias and our bias change. So the MACD was probably going below first. And so then after price broke down through that 250, then we get our bias change down there. So that's why I like to have that line. It gives me an idea that things might be changing.
That's a good idea.
Yeah.
Now we're not getting any signals in there, so it's not that big of a deal, but sometimes you do get signals. And to know that you're close to your bias change and you see your shorter time frame moving averages closing in on that 50 SMA from the upper time frame, you know that you might just be going sideways.
Hey, Danny, real quick. Scott programmed this MACD. He built all the fancy stuff into it based off of my strategy and the way kind of like me and a small group of people created the strategy and then, built it. So he made it custom and we were just dragging and dropping just like a normal person. So it's in the group and it's called version 7 for the person who just messaged the group and then messaged me privately for the other person to answer all those questions. Okay, so I'm going to rename this video. Go ahead.
No, I was going to tell you, I know we want to keep going, but I know you have to go too. So, we have
Okay,
questions,
guys,
but we have to get off now.
She's like, get off now. So that's what I was getting ready to say. She is definitely right. I'm going to rename this video ATR, ADR, and fancy MACD. This way people understand what they're going to look for and they can really study this video. It will tell you everything you need to know about your entries, how to take them, and this indicator. So
Yeah, this is your all-inclusive.
Yeah,
this is great.
deep into information. For those of you who want to learn, the information is there. So starting next week is going to be that challenge. So my advice is, whereas usually I'll tell you to take a break, my advice is to watch as many of these annoying videos of us just talking and yapping about everything under the sun, and really get a feel. Start with this one, double check and understand as you kind of go through some of the other ones, and be ready for next week, because as of next week, we're gonna be doing the challenge. We're gonna be looking for entries, and you guys, a lot of amazing things are possible, but it's time that we actually do it. So I'm all for talking and growing and coming up with new things together. But I promise you, you will be so happy if you just stick with something long enough to have results. So my prayer for you and my hope for you is that you stick with this long enough. I don't care if it's just to pay off your car. I don't care if it's to buy your mother a house or medical bills, or just for whatever your next level in life is. So if it's to retire your wife, whatever that looks like, I'm hoping that you stick with this one thing long enough to do so. So I will stick with the scalping strategy. Pat had asked me to personally, whereas I wanted to go on to new strategies for at least a little bit longer, maybe a few more months, I suppose. And we will go from there. But these are great. Their signals are doing great. So please take them. For those of you who don't know, Elvis's signals are good. Like, he uses the cloud, they're good. The stop loss obviously is a little odd, but the accuracy is there, because I get the numbers every week. So if you guys are kind of standoffish or unsure, please know that the accuracy is there. So please be taking some of the signals from myself or from Elvis and Pat. So
Yeah, the last signal that you gave was great. I can't remember which one it was.
Both of the last ones, they hit amazing. And actually CAD JPY is dropping again.
That's what it was, yeah.
So it just dropped hard. If it breaks the low, so guys, if CAD JPY breaks, let's see, because I was in it and out of it a couple of times now. I've got a ton of pips.
Yeah.
So if it
Me
breaks
too.
320, okay, then you could probably wait for a retest and then take it again. So, and next week you guys can win some money. You'll win some Amazon gift cards. You'll win some, more. I'm not gonna do one-on-one per se. I'm gonna do like a small close-knit group where we get to go super deep and whatever, but you'll get to be part of that too. So come ready to learn. Gotcha.
Thank you, Jenny. You're so amazing. Thank you so much.
I love you guys all. Have a great day, and we'll talk soon.
All right.
Fast thing. This is going to be not too much work for me to do this coding, so I would expect to see something in the next few days.
I appreciate you, Scott.
Awesome.
Thanks, Scott. Thanks, Jenny.
Thank you, Scott. We all love you too. We'll talk soon.
Bye, all.
Bye, guys. Have a great day.